Welcome to the US election special. Today I focus on the economy. Looking at today's media coverage, it's all about Puerto Rico, some jokes made, and other irrelevant aspects which have nothing to do with real issues. So in this video, we just leave aside all of these irrelevant issues and focus on data. Let the data speak. In particular, I will focus on long-term data, long-term time series, to actually talk about long-term performance issues in the case of the US economy. So this gives you, I hope, a more balanced perspective. All data are available online. I also have some data on GitHub, including an Excel file where I have done all the basic descriptive analysis. The link is also down in the description. In this video, we will look at economic growth, then public debt and spending, which might be a little bit surprising, inflation and trade. Economic performance is always an important predictor in US elections, so one should not ignore this. When it comes to assessing economic performance, of course, there is no perfect way of measuring that. What I suggest is to look at real GDP over longer periods of time, because there's always quite a fair amount of noise in the data, and I really want to look at long-term performance or underperformance. If you want to explore trends, taking a log, so a natural logarithm, is usually a good idea. In this way, any straight line means a constant growth rate in percentage points. I have done another video that actually explains this in a lot more detail. I go all the way back to 1929, so not a great period to start. You have here the Great Depression and later the recovery, and then I estimate a trend line. So this red straight line is our long-term trend in real GDP in the US. And as you can see, you have underperformance going back actually to the global financial crisis. So in a way, it's not really a terrible performance. So GDP in real terms, so after considering inflation, is still going up. However, it is below the long-term trend. Now, when it comes to public debt relative to GDP, which is a reasonable measure, is at a very high level. In fact, we are at levels which we haven't seen since the Second World War. Of course, for obvious reasons, spending was insane in this period. Since the global financial crisis, there's a steady increase in debt relative to GDP. Now, to be clear, these levels, and here we talk about 120% of GDP, are not unsustainable for the US. So that's not a problem. There is no obvious risk of default. However, it is quite expensive because obviously you have to pay interest. So this absorbs a significant amount of spending. How to fix it? The best way to fix it, as we know, is to simply grow more. Because once you start cutting, once you increase taxes or you cut spending, you might actually harm long-term growth. So it depends exactly how you want to do the cutting to avoid any damage to economic performance. Now, when I looked at government spending relative to GDP, it's actually a lot more stable than I anticipated. Again, of course, you have the big impact here of World War II. So that's obviously defense spending, but it looks pretty stable in the last year. So nothing really exciting going on. Now, spending includes consumption and also investment, as well as defense spending. Inflation is the real issue here, and that's a problem for the incumbent. So of course Biden is no longer in the race, but it will affect definitely Kamala Harris, because end of the day she is linked to the administration. Inflation tends to be a very good predictor of US elections, and obviously this sharp increase in prices is a problem because people indeed feel a lot poorer. When you look at particular prices, one area definitely sticks out, and this is healthcare costs. So here I just look at long-term healthcare costs, and I also put here a price index in comparison. Of course, you have inflation, as we just saw before. We have this increase in the last years, but it's nothing compared to the sharp increase in healthcare costs. Now, this is clearly not sustainable. You cannot maintain these levels of price increases, because at one point, healthcare will be the US economy. There's nothing else left. So when you look at health outcomes such as life expectancy or morbidity, the US does not have amazing outcomes for all the money spent. So that needs fixing. Again, nobody really talks about it. The other thing which is happening, which might have peaked a little bit before the global financial crisis, and this is a measure of openness. Now, openness can be measured looking at exports plus imports relative to GDP. So it talks about the integration into the global economy. It's a measure of globalization, basically. And what you see is that we certainly experience a slowdown of globalization. Some people argue we might be in another phase of deglobalization, which happened earlier in the 1930s. So in this period here, where we had also quite a stable phase of openness. It did not increase in this period. And then after World War II, you see a massive increase in openness across the globe. Now, why does that matter? Trade, in a way, is a good thing on average. Of course, there are winners and losers, so one has to think about compensation. The other thing is trade and interconnectedness can prevent conflict. And this is an important issue in a period where you have more and more tariffs, you have trade wars, and you have deglobalization, because then the stakes are lower. So then conflict might be more beneficial because you don't really harm yourself as much. So I would be very concerned if deglobalization continues. At the moment, one has to be honest, it's only slowing down, which is still acceptable, and we will see what happens next. In summary, the economic performance is not amazing, but it's not terrible, to be honest. But inflation is a real problem and will be a concern in the election. Healthcare is out of control, needs to be addressed, not straightforward to manage. So look at the data, analyze the data, and may the force be with you.